shares of Hong Kong-listed Evergrande closing down more than 20% after the stock was halted. Now, a Hong Kong court ruling that one of the country's largest property developers is failing to deliver on its restructuring plan. For more on what the potential ripple effects mean for U.S. investors, we want to bring in Dennis Unkovic. He is a partner at Meyer, Unkovic and Scott. Dennis, it's good to have you here. So when we talk about the issues right now, that China's property crisis obviously continues to drag on. Put in context just the risk that this poses here for global investors about the fact that, hey, maybe the worst isn't over for China.
Well, Shauna, the Evergrande at one time had $300 billion in debt, so it went in bankruptcy in 2021. Since then, it's been fighting to stay out of bankruptcy. Since then, the courts have said to the creditors, please, can you settle this? The answer is no. I think the judge said this morning, enough is enough. And so she said, we're going to have this company liquidated. The big problem, Shauna, is that if it was just one company, you wouldn't really care. But it reminds me a little bit of the Lehman Brothers moment. When Lehman Brothers went down, there was a question about how it would spread. You have other companies like Evergrande, for example, Country Garden, that have similar debts. Country Garden is now the largest private real estate company in China, and it has similar problems to Evergrande. So the problem is it isn't over, and it really may just be beginning.
The coincidence of timing as well here, Dennis. I mean, they're trying to stimulate the economy in China right now. So what is the significance of that timing, this taking place in the liquidation at a time where they're trying to put more liquidity into the system?
Brad, this couldn't come at a worse time. What the Chinese government really, going back 3 years, has said, look, we don't want any more private lending to these companies. But in China, they have something called shadow banks, and they are sort of like non-regulated banks that lend money. Well, they lent a lot of money to Evergrande and then Country Garden. And then as they got in financial problems, it really got worse. And so as the Chinese government, the Bank of China is saying, I'm going to loosen up the requirements to buy a house or to make an investment. But really, I think China at this point is doing too little. Whether it's too late or not, I don't know. But the Chinese government is taking this seriously, but it hasn't taken a major step. One other thing, if I can mention it, the Hong Kong court has said, bankruptcy, okay, you, the creditors, can execute. But most of the assets, Brad, are located in China. The question is, will the courts in China enforce this order from Hong Kong? Although Hong Kong is part of China, the question is, will they attack or essentially allow these assets in China to be taken over by the liquidator, the person who runs the bankruptcy? The answer is, I really don't know. But if I'm a Chinese official, I'm worried.
Well, Dennis, exploring that a little bit more, and I know you briefly mentioned it, it's tough to tell right now. There is so much uncertainty, but do you think it is too little, too late?
Yes.
So then what?
I can give you a longer answer, but the Chinese, this is probably $1 trillion problem for the Chinese. And what Xi Jinping doesn't want to do, I think, is to say, okay, if there's a problem, the government is going to bail out these private companies, because that's really against what the Chinese party wants. They essentially want control over things, but they don't want to bail out private industry. And so it really couldn't come at a worse time, Shauna.
And Dennis, then bringing that back here to the U.S. and discussing the geopolitical relations aspect of this, China obviously a hot topic here heading into the 2024 election. If we do get a Biden-Trump rematch, how do you think Beijing is thinking about the outcome here in the U.S. and what that relationship could then mean for their economy and their markets here going forward?
I don't think the Chinese can figure out any better than we can what's going to happen, Biden versus Trump. But what's clear is that the American economy is, booming's the wrong word, but really going in the right direction. The Chinese economy is going down. It's actually at the lowest point it's been in the last 25 years. And so I think they're worried about how a decreasing economy in China is going to affect their ability to do business around the world. And if I'm an investor and I'm looking at China, I'm going to be extremely cautious at this time about putting any more money or investments into China.
Further along that thought, if you're an investor and you're looking at China and trying to game out which companies are most impacted by what's taking place both on a larger level, but specifically within the Evergrande issue here now and the liquidation. I mean, are we talking industrial stocks, Caterpillar? Who are the most exposed from your perspective here?
Those companies that are selling hard goods to China now, and it goes across a broad range, they are directly affected by the health of the Chinese economy. To put this in perspective, about 25 to 30% of the Chinese economy is dominated by real estate. And as we've just said over the last few minutes, that's getting worse and worse. And so if you're at all playing into the real estate market and supply, you should be worried. Other thing is that if you are sole sourced out of China for anything, I think you need to really seriously look about an alternative source, not necessarily not doing business in China, but saying to yourself, do I really want to be so exposed there? Look at Apple, how many things they're making there that we all have in our pockets here right now in China. A lot of them being manufactured there. I'd take a serious look at that if I were there.
Dennis, great energy, great context and insights here. Dennis Unkovic, who is the Meyer, Unkovic, and Scott partner here. Dennis, appreciate the time.
Thank you, Brad and Shauna.
You got it.